Yep. Welcome, everybody. It is Friday. It is State of the Markets with Scott Redler. We are trying to figure out what is going on. So, of course, Scott Redler has to come here and explain the world to us. So, Scott, how are you doing today?
I'm doing all right. Doing all right. It's Friday before holiday week end. What could be so bad? Obviously, a little tricky market this week. Major event, few of them. With Nvidia being, the catalyst, the last one, and them selling it down, and then today's bounce back makes it a little tricky. But all in all, you really can't complain about the market action. There's been a lot of things to do, a lot of specific trades. At times, it feels like, oh my God, it's so bad, and sometimes it's like they're giving money away. So the bottom line is, you pick and choose your battles and you pick and choose your time frames. But ultimately, the market's the market, and we got to approach it the way we do. And if you took down some risk yesterday, which we'll get into the chart, it's fine. You had some ways to buy some things back today as things rebuild, but it's hard to tell kind of what's next as we come into the next week or so. So you might as well have a little bit of what I call low gross, low net, which means don't have that much risk on, be a little bit more tactical, and let the market give more clues on what's next.
Okay. I mean, so does the fact that we're heading into holiday, is that because it looks like you sold a lot of positions over the last few days? Did the holiday play into that at all?
To be honest, it was really yesterday's action. Like if you look here at the chart of the spies, let's get to the spies. Look at this wide range bar, right? You've had a pretty big move since. Remember, I bought the Blood in the Street account down here on what was that? That was April 19th, and I sold it on this day, which was a great buy. Since then, we've gone sideways. And then yesterday, I was like, hey, guys, what are we going to do here? Are we going to hold and build, or are they going to sell the Nvidia event kind of like they sold when we freaking killed Osama bin Laden? Everyone thought the market was going to rip, and we sold, and then we were in a corrective phase for a bunch of months. So when you have the stock market and the S&P up 11% or so, and up a hell of a lot more than that from the actual 2022 October lows, for me that trades actively for a living, I take down risk when I see a candle like this. So I did sell some things well. I had a bunch of things on, and then I got stopped out of a few things. And ultimately, if I held a bunch of them, would I have done better today? Probably. But ultimately, you look at this candle right here. This is, a pretty wide range bearish engulfing candle on April 4th. Okay, where we got above a high, couldn't hold it, broke below a low. Then we went sideways a little bit higher than the bears would have liked, and then rolled down. At this point, today's action is kind of repairing us. Plus, you see some leaders or some names making new highs, which we can get to. So ultimately, it doesn't look like the bears that sold some strength yesterday into an event like Nvidia, which sometimes is over emotional, doesn't look like they're in full control. So it's very specific. And we've been in this type of specific tape for weeks and months. Not everything's moving together to the upside or breaking out at times, and not everything's coming in. So maybe we just have to be that specific and that planned, depending on how much time you have to allocate to the market moving forward through the summer, because the summer is a time when a lot of people try and take a little time off. So if you're taking time off, make sure you're not too overly involved, or you give things a lot of space.
Okay, so that big ugly red bar is that just a case of maybe the buyers just needed a little break and Nvidia was the excuse?
Yeah, it could have been like, hey, it would have been a little different if we were up like from here. Remember when we were up from this day and we were up like 4 days in a row from the post Fed low, and then it felt like there was a little bit of a pain trade. Like here, it was a little more odd because we went sideways for 5 days. It felt like if the market wanted to, we could have held up and we could have had a healthy day in tech, but instead, everything was on Nvidia, and then they sold AMD and they sold SMCI and they sold all the peripherals AI semis. And then, they sold Amazon, they sold Meta, they sold Microsoft, and then Nvidia was up here. And then finally, when we rolled. So it was just a weird dynamic where sometimes you have to shake sentiment. I guess sentiment was too bullish up here, and now it's more mixed. So we'll see how long we have to stay in this range. We have a few new points of reference. You have 526.89, then you have this prior high, which we held, which was important. And now we'll see how many days we go sideways. Just we can't get too big of a false sense of security if it seems like we're hanging in here, because that's what happened after this last time, and then we roll down. But again, there are definitely some names out there that are showing that it doesn't matter what happened yesterday. there are some names making new move highs that the alpha team's been all over, which we can get to. And cheers to the alpha team, my crew, as well as Redler All Access, and cheers to everyone out there who approaches the market every single day and tries to make a living and prepare for the long term and tries to have some fun, because that's what you have to have in life, right, Mikey? If you have no fun, you're pretty damn boring. Cheers.
I'll drink to that if I can get my mug to my favorite mug to appear.
There it is.
Okay, so everybody's always babbling back and forth. Everybody. All right, let's get a little dark, Scott. We're gonna get very, very dark. A lot of people seem to have like a death wish, where it's almost like they're hoping for the market to die. It's the whole "this won't end badly" crowd. And I know you're always looking at
no, it's
charts.
This won't end well.
Yeah,
Something like that.
Yeah. It's basically what goes up must come down. I don't know how you want to put it, but okay. So where is actually the line in the sand for where there could be real trouble in the market?
Well, you remember, like, again, this was your wide range bar. Then you had to consolidate for a few days. Right here, I remember on April 15th, this was your line in the sand. This is when it broke below that low. So this was the line back the April 4th low, and we broke it a little bit here and then there. And if you got out of the way at 512, which was like 51.15, if I remember, you didn't, you got out of the way for a decent sized move to the downside. So I'd say right here is the new line in the sand. So all they did is really shake up the tree. And if you look at the weekly and the monthly, obviously we've come a long way, and you have to know what your time frame is. But ultimately, the bears have had nothing, except if you're trading the names that have been absolutely obliterated. Like if you look here right now, so we were just talking about this on the on the alpha team. So let's just talk for a second. So look at Dell. Dell is at a high. My goodness gracious. Wow. This stock's been reborn so many times. It looked like it was done, made a new high today. Look at VRT. Okay, VRT looked like it was done. This has been, another, kind of name that's been trending higher, and it made another new high today. So the bears didn't have, much power. Look at eBay. My goodness. eBay didn't come in while the market came in, and look at this breakout. Look at this channel. So there are some things going on if you want to be an active bull, but not everything is created equal, and you have to just be careful. And then you look at Nvidia, which was our bread and butter. First of all, I want to know, who was the guy that we did the video with on Wednesday? Who's a Benzinger, one of their main guys, Michael?
Oh, I forget his name. I don't remember. I can look it up.
It was kind of forgettable. No, I liked him. He was great. So here's Nvidia. When you have Nvidia, think about the strategy you put out there all the time, Mike. You put out that ebook that we're like, oh, print the ebook. We don't do it so we could just get leads. We do that to educate you, but we do that for people that want to actually learn more, because typically you're a good candidate for our program. So one of the big strategies out there is buying Versa Pro earnings gap and then using it as a swing trade besides taking options into the move. So my play, which I went very public with this gentleman on Wednesday, was I was buying the $1,000 calls and selling the 1,050s. My net cost was $10 to make 40. Okay, that was the play. Nvidia right now is here at 1060. Okay, putting my cajones on the line besides being in the trade, letting the world know. And here you are, 1060. If you held this entire time, you just got maxed out. You made 400% on your options. If you said, Red Dog, all these option premiums are too tough. I got out of most of it yesterday, where I actually that whole strategy yesterday, and then I got back involved in the 1100s for next week. And he said, I'm going to buy verse 1015. Here's 1015. Here's 1062. You probably got in, you probably didn't get in at 1015. You probably got 1030. You're up 30 points today, and chances are you have a nice little swing trade into next week, and that's another way to play it. So the doomsday guys that say this isn't going to end well, they're not strategic. They're not planned. They don't put their homework in. They're not up at 445. They're not making multiple situations. They don't have a go-to list. They don't have a tier system. They don't have a day count rule system. These are all the things that we put out there that I need in order to make money trading for a living, that I try and teach all of you out there. And not everything is created equal. Like, this looks fantastic. It's ready to go. And then I'm also in Amazon that looks like death. Amazon's doing a whole lot of nothing. So if you were just in Amazon saying, hey, well, it made a new high, on May 9th, now look at it, and you were in that alone, you're probably not happy going into Memorial Day weekend. So sometimes you need a few things. I bought some options for next week one more time. I'm a glutton for punishment. And then the same thing with Meta. Meta seems like these are two plays that I have going into next week besides Nvidia. It seems like it finally poked its head above here. It finally is above the moving average. Maybe it wants to play catch up. If you've been focusing on this only besides the gap fill trade, you have had no success. But if you're like, hey, now it looks like finally it's poking its head up, maybe there's a play there next week. So there's always something to do long or short. But, sometimes there's not huge moves. It's just trades. So we make trades for a living. We invest long-term for a living. We put money away from 529 so our kids can go to college. And if you could do all of them because you put the time and work and energy in, you mix it all around and you can do really well in life.
Okay, Scott, I have to take issue with something you just said about the "this won't end well" crowd not getting up early, not doing enough work. I think I'm going to disagree with you a little bit because I think a lot of these people do work hard, but they work hard at reinforcing the opinion they already have. Because I think we've all seen these people that have been calling for no matter what happens in the market, it's going to crash or it's going to go up. I'll say this the gold people or the Bitcoin people or the cannabis people, where no matter what the hell's going on in the world, they have about 3,000 pages of research. Because they're just looking for more stuff. It's the confirmation bias. People just looking for more evidence of what they already believe. So how do you stay out of that?
You're 100% true. You're 100% like, it's like you really nailed the nail on the head, because it's like this week, how many people sent me a picture of the boats circling Taiwan? We're about to go to war with Taiwan. How could you be in anything? We're about to crash. Or they send me a picture of the national debt, which I think every 30 days gains, I don't even know, but more than it's ever been. So that's a problem, a ticking time bomb. So there are definitely some ticking time bombs that people call that because that's what they think it is. But then there's the market action. So the narrative usually is one thing, and the price action is another. That's why we use these moving averages. And as long as you're above the 21-day moving average, markets don't care that we're in a war with Ukraine. They don't care, unfortunately, what happened, with Israel. They don't care about the boats circling Taiwan until they do. And these are all big worries out there. You can worry about anything in life. You can worry about what's in your hamburger with cholesterol, or your steak sandwich, or your red dog sandwich, or your milkshake, or your beer, or there's always a lot to worry about. And we shouldn't be under a rock. And I try to listen to it all, but I am a cocktail napkin technician. If the trend is like this, let's see. This is weird. This is like the opposite. Let's see. Go this way, or this way. Now this way. If the trend is like it's the green screen is going, the trend is up, higher highs and higher lows. That's the trend. If we're above the 21 day, it's strong. If we're below all these things, you're in a weak environment and need to have risk down. So there's always something to worry about in the markets, in life, in your family, and you don't want to drown them out. But if you have glass half full, chances are you're going to be living a much happier life. And historically, the bull market wins over time. You get these corrections that happen, in 2-year time periods, or maybe a little bit more, that happen really fast and furious. You can make a whole lot of money and you can lose. But if you're going to see a corrective phase of the S&P down 20%, what do you have to do first? You have to break the 21-day moving average. Then you have to stay below them. Then you have to get below the 50-day and stay below it. And then you have to get below the 200-day and stay below it. So until all those things happen, I don't want to know about all the negatives out there in the world. I want to try and stay positive, constructive, and make money in the market. If all those things happen and we become a bear market, bear tape, that's awesome. I'll be tactical. I'll be putting my blood in the street account to work like I did back, if you go to the the chart of the S&P. Let's go back to the chart of the S&P for a second, real quickly, because everyone did really well with my Blood in the Street account, which I'm very happy about. Everyone's like, Redler, why did you only put, one tier? Because we were only 5% or so off the highs. If you remember here, this is when we put the Blood in the Street account to work, where everyone's yelling at me. They were telling me we're going to 4,500, we're going to 4,000, we're going to 3,800. Well, this was 5.5% off the highs. And then I sold it here, which was my strategy. My discipline was to sell it at a new high. If you go back weekly or monthly, you will see I was able to put more than one tier to work back here during the taper tantrum. Why? Because we were down 20%. During the pandemic, we were down 33%. And then during this time period, there was a lot of this craziness. So for now, I was only able to put one, tier to work. So until something materially changes in the market behavior and it pays attention to the crazy trillions that we're printing and the wars we might have and the problems at the universities where these kids freaking have silver spoons coming out of their arse besides their mouth. Did I say that? Yeah. Then we'll see. Right now you have a little bit of a doji here. We held 52.64. You now have the low of the week, and we'll see. Maybe we come in, maybe we don't. But I am paying attention to what's happening in the markets, and I'm sticking to my discipline on every level until things trigger and go. And if they don't trigger and go, I live in my lane. That's what I would say to everybody out there. Live in your damn lane and know what that lane is, and don't play between lanes. If you play between lanes, that's when you get the most hurt, because you can't handle what's happening.
Okay, all right. So, Scott, it looks like we have to get you back to trading. So Scott has to trade the close. So, guys, if you want to have a good weekend, go to t3live.com/show. Get Scott's ebook. If you don't download it, things will go very bad for you. So please go to t3live.com. Bad things will happen if you don't go to this link.
I'd rather you eat some hamburgers and hot dogs, drink some beers, go in the ocean, play in the mountains, hang out with your friends. But if you want to download the ebook, you probably could make yourself a little bit more educated for the future down the road. And someone said, before you go, what about Bitcoin, Bitcoin, Bitcoin? You know what? Bitcoin, is trying to hang in here one more time. Do I think we're going to have a Bitcoin weekend? I don't really think so, but I like the bounce that Bitcoin happened today. I did buy a little bit on the downside. It did hold this area. So, maybe there's a small chance that we have a little crypto excitement, because everyone needs something to do. But I'd rather you be on the beach, in the mountains, hanging out, getting some endurance versus, trading Bitcoin. But here it did kind of hold where it had to here at 67. Now we're back at 69. And, I do think at some point, depending when we're going to get above this 72 to 73.8, and we'll see 80. I'm just hoping that it happens before June 21st, because that's where all my options are. Sorry for interrupting you, Michael. I love you.
It's your trading time is running out, Scott. It's 3:56 p.m. Eastern time. But guys, forget everything about Scott said. Forget your family. Forget your friends.
Forget everybody. You download the ebook.
You need this ebook. You don't need anything else. This is all you need in the world. If you want to be happy, go to t3live.com/show and get the ebook. That's why we're in such a good mood today, because we got the ebook. Okay, Scott, you got 3 minutes left to go and trade. So,
all right, I just got filled on something. XOXO.
Okay, all right. Thank you, guys. We'll be back in the future. Stay tuned.